please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. We are done with investing in equity, says the largest domestic institutional investor, Life Insurance Corporation of India or LIC. The firm has made an equity purchase of whopping 39,000 crores in the first half. Chairman of LIC, Mr. VK Sharma, said that they will sell where they see opportunity.
Equity we don't want to buy.
You're done with equity investments?
We are contrarians and market is at peak.
So you want to sell?
So certainly we will be selling it wherever we have the opportunity.
All right, that is a telling statement coming in from LIC. But let's move on to a CNBC TV18 exclusive then. The auto industry has sent an SOS to the government on its GST concerns. The sector has also claimed a refund on exports to the tune of 2,000 crore rupees. Ronojoy Banerjee has all the details. Ron?
Well, this was supposed to be a pre-budget consultation meet with North Block, but it overwhelmingly turned into one where the industry was apprising the government of GST-related issues. They've raised 3 or 4 key concerns, one of them being the fact that the export refunds have not been made. In fact, the auto industry is claiming that export refunds to the tune of 2,000 crore rupees has not been made yet, which is hurting automakers. Here we understand from sources that companies like Ford, Volkswagen and Nissan are particularly impacted. Ford, for instance, I know it for a fact that they have overall export refund pending to the tune of 500 crore rupees alone. So this is where the auto industry is telling the government to expedite the refund as early as possible. Apart from that, what they've also sought for is to bring down the multiple slabs on cars that GST has brought in. Currently, there are 6 slabs if you take into account the cess rate. So you've got 29%, 31%, 33%, and then depending on the size of the vehicle, the GST rate can go up to as high as 50%. That is something that the auto industry wants, that these be clubbed at a maximum of 2. Apart from that, they've also sought the government's intervention to address this inverted duty structure this GST has created. While electric cars are taxed, GST rate is just 12%. But if you look at the IGST rate on electric batteries, for instance, that stands at 28%. So they want harmonization on that front as well. Apart from that, the auto industry is also asking the government to ensure that the R&D benefits, which remember will expire by 2020, that the auto industry is given some more years' time, especially when it's making large-scale investments as it gears up to transition from BS4 to BS6.
All right, thanks a lot for that, Ronojoy. But let's just focus to the earnings now. And yes, they have been coming. Dish TV came out with a weak set of numbers yesterday. Sonal is here with the key highlights. Sonal, weak set, but the focus moves to the Videocon merger now?
Well, absolutely, you're absolutely correct, Mangalam. Though the numbers are weak, revenue down around 4%, the EBITDA down by 19%, margins contracted by 500 basis points, leading to a loss of around 17 crores. But still, the sentiment remains positive because the company has reiterated its guidance of strong synergies coming in from the Videocon merger. If I take you through the highlights, the net subscriber addition was around 0.188 million, but the company expects that by FY19, they'll be able to add close to 1 million additional subscribers, and also the ARPU came in at 149, which was quite flattish, but the company expects that through new offerings they will be able to aid to more margins in terms of average revenue per unit. Also, the company says that though this time it was weaker due to lower subscribers, but going forward due to the Videocon merger, they expect it to be better, and CLSA is quite positive. They've increased their target price to 108 versus 97 earlier.
Okay, Sonal, thank you so much for that. So let's keep an eye out on how Dish TV reacts today. But ratings agency Fitch has withdrawn ratings on Reliance Communications. The agency has withdrawn its long-term foreign and local currency issuer default rating for this telecom firm. It has also withdrawn the rating on Reliance Communications $300 million, 6.5% senior secured notes due 2020. Announcing its decision, Fitch said that it has chosen to withdraw the ratings for commercial reasons and it will no longer provide ratings or analytical coverage for Reliance Communications. Well, shifting focus to action in the primary market then, Future Supply Chain IPO opens for subscription today. Mangalam, tell us the details. One more Future Group company being added to your kitty?
Yes, one more Future Group company being added to my kitty. You know, it's a 650 crore IPO, the 6th Future Group company to be added on to the exchange. The 650 crore IPO, as of last evening, they've raised about 200 crores from anchor investors, and you name it, L&T Mutual Fund, DSP, BlackRock, Edelweiss, even a couple of FIIs have shown interest there. The price band is 660 and 664. It is actually an offer for sale by Griffins and the promoter Future Enterprises. And the post-issue market cap that they're seeking is close to 2660 crores. Remember, Griffins is SSG Capital. In November itself, they had sold about 5% stake at 636 rupees per share, which is slightly lower than the price band that the company has offered its shares at. And Future Enterprises, I'll watch out for that company as well. In trade today, holds 57.5% stake in the company. Post-issue, it will go down to 52.5%. A little about the company. They are a third-party logistics supplier, and their Nagpur distribution center in Mihan is actually one of the best the largest in the country. Over the last 3 years, the revenues have grown at 17% CAGR, and the profits have grown at 36%. They enjoy the best margins in the industry, which is a positive, and they have revenues coming in from third-party logistics, express, as well as others. If you take a look at the concerns, the biggest one is increased concentration on the Future Group itself. As of last year, 70% of their revenues came in from Future Group companies, so that is something I'll be watching out for. Apart from that, they have a high working capital cycle. The debtor days are 82 as of the first half of FY18. In terms of valuations, they've been offered at a fair amount of valuations in line with what Mahindra Logistics trades at. The street is working with a 90 to 100 crore net profit in FY19. If that comes by, the company is trading at 30 times FY19 earnings. Let's see what happens. There is a lot of appetite for Future Group companies given the sort of movement that we've seen in the stocks.
Okay, let's see how this one fares. But moving on then, insurance regulator IRDA has released a consultation paper on private equity investments in insurance companies. The regulator has recommended private equity investments in Indian insurance companies as promoters via a special purpose vehicle. Investments over 10% will be subjected to a 5-year lock-in period, and a PE player coming in via an SPV cannot be a promoter for more than one life insurance, general or health insurance company. Well, on to a CNBC TV18 exclusive then. It is going to be a very competitive race to buy out IDBI Federal Life Insurance. Around 8 players are said to be interested in putting their hats in the ring for the business, which is being valued anywhere between 3,000 to 3,500 crore rupees. Yash Jain has the details. Yash, over to you.
Well, Anisha, as you rightly pointed out, the stake sale process for IDBI Federal Life Insurance has been set in motion. JP Morgan, which is the sole banker for the life insurer, has sent out a memorandum of information towards this particular stake sale and expects non-binding bids from life insurance companies within the next 2 weeks. Just to put things in context, IDBI Federal Life Insurance intends to sell 100% stake of the company, and it is a 3-way joint venture between IDBI Bank, Federal Bank and Belgian insurer Aegis Insurance. We are also given to understand that there is a very strong interest which is expected for this life insurance company. Life insurance players including HDFC Life, ICICI Prudential Life, Max Life, Bajaj Allianz, Birla Sun Life, Bharti AXA, Tata AIA, Kotak, all are expected to put their bids for IDBI Federal Life Insurance within the next 2 weeks. And what is really driving this strong interest from investors? It's actually not the size of the business, because that is comparatively smaller, about 1 million policies, 58,000 crore of sum insurance. But what really is driving this interest? It is the bank assurance tie-up. IDBI Federal Life Insurance operates through more than 3,000 bank assurance branches of IDBI Bank and Federal Bank, and that is really getting all this interest together. We've also written to all the players included in this particular story, and various life insurance companies, be it HDFC Life, ICICI Prudential Life, Max Life, Tata AIA, Kotak, have said that they do not wish to comment on market speculation, and we are yet to receive a reply from the 2 shareholders, that is IDBI Bank, Federal Bank and ICICI Prudential Life.
All right, Yash, thanks a lot for that. IDBI, remember, holds 48% stake in that, as per Yash, valued at around 3,000 to 5,000 crores. We'll watch out for that. But with that, we'll slip into a short break. Come back, we will get you a check on the cues to watch from the futures and option space.
Well, let's shift focus to the world of commodities now, and Manisha Gupta joins us with all the update from the world of commodities. Manisha, good morning. Happy 18th birthday to the CNBC TV18 family. But what's happening in the world of commodities?
Well, happy 18 to all of us. But yes, if you look at the global markets, it hasn't been such a great cues, especially coming in for the metals as a sector. I mean, last night in the New York session, you saw a complete sell-off for most of these metals, and Shanghai has opened to further follow-through selling in many of that. So if you look at the copper prices, yesterday was the worst one-day decline that we saw come in since July 2015. It was down 4.7% at one point in time, and Shanghai has opened 3% lower for the copper prices. Well, it is about the increase in warehouses for copper stocks. It also has to do with the fact that while the metals have seen some support in this year, it has led to mine revival. The refined production also has been increasing. And suddenly, with the kind of data that we have seen coming from China, isn't very strong. So you have the manufacturing numbers on the weaker side. The investment numbers are not so great. And that is really bothering the metal bulls right now. And not just copper. If you look at the aluminum prices, they are down 3% in last 24 hours. It also has to do with the nickel prices, which fell 4% in New York yesterday and have opened weaker in Shanghai. Even the rubber prices are down by 3%. So most of the commodities that have opened in Shanghai today have opened with a red mark on that. And not just the industrial metals. If you look at the precious metal space, you have the gold prices at a 2-month lows. You have silver prices trading at 4.5-month lows. So everything with a metal mark to it is trading weak.
All right, everything with a metal mark to it, trading weak. Manisha, thanks a lot for that. We're talking about the 18th birthday. As an interesting aside, the SGX Nifty has settled 18 points lower. And talking about the SGX Nifty and the equities market itself in the futures and options space, yesterday we saw a lot of bearishness coming in from the FIIs. They not only sold about 1,471 crores, roughly 1,500 crores in the cash market, they went ahead and sold nearly 2,000 crores in index futures. In the index futures, they added close to 21,000 short contracts, unwound 250 long contracts. That's near 26,000 short contracts being added on a net basis. The FII long exposure in index futures, which was at 68% at the start of the series, has consistently come down, and in just 3 days of this series, it's come down to 58%. So the short point is that they are betting for some bearishness, but absence of a significant down move may result in short covering, which may result the markets going higher. The 10,100 calls saw a lot of writing, 10,200 calls saw some writing. 10,200 put writers, they shed and packed their bags. They were a little jittery, and the 9,900 puts saw some purchase in terms of protection. With that, it is a wrap on Power Breakfast. But